Folks, on Mondays, we are lucky enough at one rental at a time to talk to Taylor from Life Goal Investments, a 10-year Wall Street veteran and someone whose life mission at Life Goal Investments is to take the experience from serving the 1% and bring it to the masses. We talked to him about all kinds of things, from stock markets to crypto to the economy, and today will be no different. We're going to start with CPI and the jobs market. Man, how you doing?
I'm doing great. Thanks so much for the kind words there. Yeah, CPI is coming up here on Wednesday, and this is a big month because when you look back at last year, this was the high watermark in June of last year.
Yeah. Well, let's start with the jobs first. I don't know. I think you were on vacation last week, but I'm sure you still saw the blowout ADP report on Thursday, 497,000, followed by a miss from the BLS on Friday at 209. What do you think about jobs first, and then we'll close with inflation and CPI?
It was a very, very, very confusing week, I think, to anybody who was watching jobs, because granted, what they measure, the BLS, and what ADP, private payrolls, measures are two different things, obviously. But for them to come in that drastically different was something that I don't think anyone was expecting. So when you saw ADP come out and more than double their expectations for how many jobs we added for the month, you looked at it and said, okay, we have to see a big number come out from the government, the BLS as well. And then it didn't. And it was such a weird, like, you felt like you got a gut punch because, ADP came out so hot and you're like, oh man, this is an inflationary problem. And you feel like you get a gut punch, and then the wind gets back to your sail and you say, okay, maybe it's not as bad as it was when the BLS report hits. But it was a weird week.
And the BLS report was actually weaker than the headline, right? Not only was 209 a miss,
Correct.
but they subtracted, I don't know, 100, 110 or whatever from previous months. Wages still relatively strong at 0.4 increase. So again, wage inflation is proving sticky. I think it will be the stickiest part of inflation, like we've talked about all year. But yeah, I think it's clear to see that the job markets is falling. And at least one more talk about ADP and BLS. In my opinion, as a Wall Street veteran, please correct me, the only number that matters is BLS.
Correct.
ADP is interesting for about 24 hours.
Correct.
And then it's irrelevant.
It's always 2 days before. So it's something that you can try to get a little bit of an idea and the insights of what's coming in the BLS, but the Federal Reserve and policymakers don't give a darn about what ADP is. It is all what the BLS says. So these numbers came in weak, right? Weaker than expected. And that is a bit of a reprieve on the inflationary front. But to your point, you did still see a sticky number from a wage growth perspective. And so it's kind of that back and forth. And when you look at kind of the most leading, so labor is always a lagging economic indicator, but the most leading of the labor lagging economic indicators, if that makes sense, is initial jobless claims. And so jobless claims on, kind of a rolling basis over the last 3 months or so have seen a tick up. And so that does allude to the fact that this job market might be softening some, which is welcomed to the ears of the Federal Reserve.
And then one more final point about ADP and the jobs number. Let's not forget that they've always historically been 2 days before. Last week was a short week, so it was a day before. But their ability to quote unquote stick the number was so bad that they actually went back and took it off for 2 months or 3 months as they rejiggered their calculations. So I think this is only the third month back. So we probably should have been more aware that ADP was maybe suspect, especially with a huge miss like that.
Yeah. That's 300,000 jobs almost, right? Off of what it was expected. Yeah.
Yeah. Well, now let's get to CPI, because again, this is the last inflation reading before the next meeting. I think the next meeting by the Fed's on the 26th and 27th of this month, late July. I believe PCE will be the day after the Fed talk. So this is the last inflation reading. I think expectations are 3.1 headline and 5 for core. How do those numbers feel for you? Again, even 3.1, that'll come down from 4. So clearly a downward trajectory.
It's a big tick down. Yeah. And we did see a full percentage. What was it? 2 months ago? I think, Michael, 2 months ago, we saw a full percentage shaved off of inflation on the CPI headline number. And yeah, so we're going to see, if expectations are in line, almost a full percent to come off here as well. It's funny. I looked back at the month to month stats looking back at last year. So
Mhm.
9.1% was the high water mark that we hit in June. But when you
Mhm.
look at it on a month over month basis, inflation went up 1.4% last June in the single month. So
Yeah.
that is what we're going to see rolling off here after this month, which is why we expect to see a big number tick down. But then the subsequent months went 0, 0, 0.2, 0.4, negative 0.1, negative 0.3. So essentially
Mm.
for 6 months there, you're not going to get any reprieve from last year in the big numbers rolling off. So this is the last time we're going to get that big tick downwards based on the base effect of last year. And then moving forward, it's going to be much, much tougher
Mm.
sledding for the Fed to continue to shave numbers off of this inflationary backdrop.
Yeah, this is something I've definitely tried to help the audience understand. I actually am calling for not only 3.1, I'm calling for 2.9. I've been calling for that for 3 or 4 weeks, mainly because of the base effect, mainly because commodities haven't upticked, mainly because used cars, and I think we'll get just a tick of shelter coming in. So I am calling 2.9 on the headline. But you're right. I've actually said, I think yesterday for the first time, I expect August, the July reading reported in August to go up.
Yeah.
And I think that'll shock people, right? It'll go from 2.9 to 3. But again,
Yeah,
the,
yeah.
the,
The
the
trend,
cause.
the direction in general is what is the big change. So if you get this drop off and then it starts to go like this, and we've seen this happen around the world, right? This isn't something that's
Oh yeah.
just unique to the United States. You're seeing people have inflation come down and then start to tick back up, and it's a tough thing to start to deal with. And that's why the Fed is in such a tricky situation here where they have seen this massive come down from the top on headline inflation, at least, but they still have a lot of work to do. And that's where they're weighing this game of, do we have to keep raising rates? Do we not? So on and so forth. And at this point, they've made it evidently clear that they absolutely are going to raise rates in July at the meeting later on. But how many more times between now and the end of the year? They're saying one more. We'll see.
Yeah. Well, let's go to core. Core is the reason. Core, in my opinion, if they raise, core will be the reason, right? And last month was 5.3. Expectations are 5. I'm actually calling 4.9. Again, I think we'll beat on that front. And
What's
again, go ahead.
No, well, I didn't mean to cut you off there, but you mentioned something before, and I want to ask you. You do think we're going to start to see some shelter trickle through now?
Exactly. It'll come in this month very light. But it starts to get better next month and incrementally better thereafter. Hence, I think core. So we've seen headline come down. I think core starts to act the same way 2, 3, 4 months. I think core will be 4.9 as I shared. If you ask me what it'll read in October, it'll probably be in the 3s because shelter will come off and cars and all these other components. So I think there's a good chance that both headline and core are roughly 3%, come September, October.
And that makes sense for your thought process as to how many more rate hikes are to come. So I think that if the Fed were not to go in July, I think they've made it evidently clear that that's their intention, is to move again in July. And then they're saying one more beyond that. What's your take on that? I'm interested to hear.
So my take on it is the July rate hike would be a mistake. I mean, frankly, I'm still going to stick with no, they shouldn't. I think it's always difficult at that pivot point. I believe this as of, right now, July 10th. Today, if the Fed did nothing, they could hold rates for 18 months. If the Fed raises one, and heaven forbid, 2 more times, they will be cutting rates in 9 months or less. It's what do you want to do? Do you
Right.
want to stay higher for longer? Great, you're there. Sit on your hands, do nothing. Commercial bank lending, all the M2s collapsing, all of these things are helping. Frankly, they are rate increases without you even doing anything.
Correct.
I believe, again, I'm holding to my guns. They're not going to raise. I think they have 3 weeks, between today and their rate increase. We start getting Fed talk today, right? 3 daily, and other folks are talking today. I think we're going to start to see some doves lay the groundwork for possibly not raising. I think the smart money, I think the last number I saw was 95% chance of a rate increase. Dude, I'm on an island all by myself, and I'm okay with that. I think I don't think they're going to raise. Matter of fact, not only do I not think they should raise, I think a raise is a mistake.
Yeah. And actually, as we look back over our last month's worth of conversations, I've said now for probably 1 or 2 hikes that they don't need to hike. And that was my take for some time, again, as the lagged effect spills through. But the reality for me, at least, is looking at the data and the notes from their last meeting is that they are all the Fed presidents, all the Fed
Yeah.
voting members are on board with, they think that 1 and likely 2 more need to happen. But I'm with you. What we could see based upon this is things start to crack again, breaks, things literally starting to break. And the Fed has traditionally done this, right? They have pushed us high enough to break things, and then you get chinks in the armor and things start to wither at the seams, and then the Fed stops and then they have to cut shortly thereafter. Historically, on average, it's about 8 to 9 months. And again, these are averages, so just take them for what they're worth. 8 to 9 months after the Fed stops raising rates that they start cutting rates. So to your point, if you leave them here, you can get a longer window of higher for longer, but traditionally they break something and they mess it up and then they have to cut quickly thereafter.
So it's always the last one, right? It's like, oh, the straw that broke the camel's back, whatever it is, right? And I think they are at it. And again, I'm not here saying it'll be an easy decision. I would argue probably the data, if you are really data dependent, probably says you should raise. I'm looking at the economy, looking at the signs, looking at banking. We're going to talk about banking in a subsequent episode. I think one of the things that may cause them not to raise is they get a couple of community bank reports that are ugly. Right. So,
there is no doubt that there is possibility for that. Barron's wrote an article this weekend talking about you must see mergers in the banking sector. You can't see a 10 to 20% outflow of deposits without getting mergers. And we haven't really seen them in any meaningful way yet.
Yeah, I think I read an article this weekend talking about over the next 5 to 10 years that we may have 50% less banks in America.
CNBC has an article out just today. It talks about the fact that the U.S. has 4,681 banks. That's not exact, but that's really close.
Yeah.
And you look at Germany, France, the major countries in Europe. Now, granted, they're smaller countries, don't get me wrong, but they have 300 at max.
Yeah.
Versus ours, 4,600.
Yeah. So again, folks, we actually talked about it on the daily financial news today. You can go check it out. Financial news, July 10th. Where'd that come from? Anyways, Taylor, Life Goal Investments, where can people find you?
Yeah, find us on TikTok and on Instagram at Life Goal Investments. Appreciate you, Michael.
Awesome, buddy. Thanks again.